Yeah, good day, everyone. Good day, everyone. Good day, my people. As you all know, I still remain my humble self, Crown Forex Tips, Crown Forex Academy, and then what you guys know to be Crown Forex Tip. I always come to give you guys back to back when it comes to Forex tips. I always come to give you tips that will help you, that will enhance your trading ability, your trading profit when it comes to Forex trading, right? So, majorly, what I have for you guys, I've been receiving a lot of WhatsApp messages, a lot of DMs from people asking me that, Crown, how do you use this Fibonacci retracement and extension? Because we notice that any signals that you are sending, it always comes with Fibonacci retracement, and it has been awesome. So without wasting much of your time, what I'll be sharing with you guys today is the Fibonacci retracement and extension, and how I personally use it. That is being profitable to me. So I've been using this strategy for close to a year now, and believe you me, it has been awesome, being profitable back to back, right? So as you all know, without wasting much of your time, let's quickly delve into what I have for you guys today. Right, so let's quickly delve into what I have for you guys today, and we can actually go into it straight up. So let me just quickly share my screen, right? Let me share my screen. As you can see. So you can see what we have here is Euro JPY, right? We have Euro JPY currency. So what I do basically, right, is to look at the chart even before I use the strategy, Fibonacci retracement and extension. So what I do generally is to look at the chart, look at what the market is saying at that present moment, right? So you can see that last year, around 19th of last year, something happened, right? Something happened. The market was coming from this lower low to this higher high. But if you look at what the market is doing, the market is creating something from this lower low. It created a higher high, created another higher low, right? Created higher high. But instead of the market to create a higher low, it didn't create an higher low, right? It came back to this zone and tested this previous higher low, right? It tested this previous higher low, which is this, before going up. So the market is doing something, right? The market is doing something at this point in time, right? So that's number one thing I established, right? And the second thing I also established is, if you look at this from here, right, from here up to this higher high, to this point, to this higher high again, something happened, right? Something happened. When the market got to this higher high, it came back to this zone, right? It came back to this zone to do something, right? So the market came back to this zone. Let me change this to black. The market came back to this zone. When the market got here, I was expecting something to happen, right? I was expecting something to happen, which is the market structure, right? I was expecting a market structure to happen at that point, because if you look at this pattern very well, something is about to happen, right? Something is about to happen, because this pattern simply gives a market pattern of head and shoulder pattern. And you know that head and shoulder pattern is actually created in an uptrend, in a bullish direction, right? So if you look at this, when the market got here, I was expecting the market to give me that head and shoulder pattern before reversing back to the bearish move. So when the market got here, what I did was, when the market started retracing back, what I did was just to plot to bring out my Fibonacci retracement and extension. Let me close this. What I did was just to bring out my Fibonacci retracement and extension, plot it from the higher high here to the what? To the lower low, which is this point. This point. The recent higher high, take note, the recent higher high and the recent lower low, right? So the recent higher high and the recent lower low. So what I was expecting from here was to allow the market to do what? To come to this zone. Allow the market to come to this zone, right? And the zone I was watching out for is 0.5 and 0.618. That is my number one secret when I use when using Fibonacci retracement and extension. So I wait for the market. The thing is, you don't have to rush to take a trade in the market. You need to take time, understand what the market is saying. Is this the right time to enter? If it is the right time, you get all your confirmation clearly, then you can enter. But if that is not the right time, then you can just wait and chill. Let the market play out the way it wants to play out. So I was waiting for the market to do what? To come from this low back to this zone. Back to this zone, so as to test the previous higher high, which is the left shoulder of the head and shoulder pattern, right? Of the head and shoulder pattern. So I was waiting patiently to do what? For the market to come here. And the market, immediately the market got here, I know that, oh, the market is already at my zone. Then I should be looking out for a trade opportunity. So what I did, I didn't enter immediately because let me go away a bit. Let me digress a bit from the Fibonacci retracement so that you guys will be able to understand how I took that trade, right? So when the market got here, I didn't enter immediately. If you look at the one, because I didn't see my confirmation, if you go to the lower time frame, right, something happened in the lower time frame, right? So just look at it. Just look at it. Look at the market came back to test this previous high, which is the left shoulder, right? But at the point here, some people would have entered the market here, but I did not, because I have not seen my confirmation. Immediately the market got to this point and I see this blue, short blue and red candle. It is called evening star. When I saw that evening star, I know that, oh, this is the right time to do, or this is the right time to now enter the market. So what I did was just to plot my my risk to reward ratio. Look at here. I think I risk about 40 pips. So I risk about 40 pips. So what I did was just to look for the next high, and the next high happened to be this red candle, right? The wick happens to be my next high. So I just move it up a little bit. I moved it up a little bit, and then went back to my 4 hours time frame, right? So I've gotten my confirmation. I've plotted out my Fibonacci retracement. Now where is my take profit, my target? So that is where the extension part of it comes in. So my first take profit is this 0 point. And my second take profit is always this minus 0.27. So that is how I use my Fibonacci retracement and extension. So I use my Fibonacci retracement to get the next possible zone to enter the market. And I use my extension part of the Fibonacci to do what? To get my take profit. So you see that it is very easy. Just watch out for the zone. And when you are plotting your Fibonacci, just make sure that it is in line with the 0.5 and 0.618. Let it be within that zone, because it is more profitable when the market got to that 0.5, between 0.5 and 0.61 before, right? So it is more profitable like that. And then let me quickly tell you this: if you have not watched my previous video on market structure, where I talked about market structure, the W pattern, the M pattern, the head and shoulder, the inverted head and shoulder, and the likes, I'm going to drop the link around this video, so you can go there and watch it, for you to have an understanding of the market structure and we have, and how you can go about it. So that is how I took this trade. Let's look at another one, right? Let's look at another one, and you guys will see. Let me quickly clean this, you see that something also happened here, right? The market is in an uptrend, right? The market is in an uptrend, but you notice that the market broke the recent low. This is the recent low, right? This is the recent low here, right? The market broke this recent low. And when the market broke the recent low, what I was expecting was a bearish move. Number one, I've seen a confirmation of head and shoulder. Now the market has broken the recent low, which signifies that is the second confirmation for a bearish move to start, right? So what I just did when the market broke this recent low, what I just did is just to pick up my Fibonacci retracement, place it from the recent high, right, to the recent low. The recent high to the recent low. The recent low is this. Just place it there, and you watch out for the zone of 0.5 and 0.618. So if you look at that zone, it happens to be here. It happens to be here because many people would have fallen victim, right? Because as you can see, this also is zone, but the market did not respect this zone. That is the reason why I use Fibonacci retracement and extension very well. Most of my trade, that is what I use. This also is zone. See, this also is zone, but the market did not respect it. Why? Because it is not the time for the market to move, right? It is not the time for the market to move. So the market did not respect this zone, right? So it did not. So you just have to be very patient when it comes to trading. So I know where I want to enter. So when the market got here, it did not even bother me to enter the market because that's not where my zone is. One thing you also need to understand is that you don't have to jump into trade. It is better you have your money in your account than entering a trade and lose all your money, right? If you have your money in your account and you miss a trade, fine, it's good. Your money is still in your account. It is better than that rather than entering a trade and eventually losing that trade, right? So I waited patiently for the market to come to this zone that I was watching out for. And when the market got here, I didn't enter the market immediately because I've not seen my confirmation yet. So if you go to the lower time frame, something happened on the lower time frame, right? If you look at this, two things happened that made me to enter this trade, and I will tell you. The first one is the market is coming, got to this point, came back to this low, reversed back, right? The market retraced back to this zone to test this previous high. So something is about to happen. That's number one. So once again, if you have not watched my YouTube video on the market structure, the link, I'm going to drop the link around the video or in the comment section. You can click on it to watch it. When the market got here, I already knew that one, the market is creating a market structure, right? The market is creating what? A market pattern. Sorry, the market is creating a market pattern, which is M pattern, right? Which is M pattern. So when the market got here, that's my first confirmation. My first confirmation is the Fibonacci retracement. Second confirmation is the market pattern, which is the M pattern. And another confirmation that I saw, which is my third confirmation, is the candlestick pattern. If you look at this candle, these two candles very well, these two candles, this green and red candle, means something, and it means a tweezer top, right? A tweezer top. If you look at it very well, you can see that the red candle did not go higher than the green candle. Both the wick and then the body are the same, right? Which is this. So that is, this type of candle is called a tweezer top candle. So I have three confirmations: my Fibonacci retracement, my market pattern, and the candlestick pattern. So what I just did was that I entered the market after the close of this candle, after the close of the red candle, right? Place my stop loss above the tweezer top candle, right? A bit above the tweezer top candle, and go back to my 4 hours, to my higher time frame, right? I went back to my four higher time frame, set my stop loss. My stop loss is already there. My first take profit is what is this 0 point zone, and my second take profit is this, right? So that is how I use my Fibonacci retracement. If you can see this very well, this a risk reward ratio of 15. So that is how I use my Fibonacci retracement. And if you look at this, the market got here, something happened. The market got here. I was expecting the market to get to this 0 points. It's minus 0.7, minus 0.27, which is my extension. But the market did not get there. When the market got here, something happened, right? Something happened. So what I did was just to look at it. Is this a zone for the bullish big boys in the market to actually take over? And when I went back to the previous chart, to what happened in the past, I could see that, oh, that's a really a good zone, because this is zone which is 1, this 2, this 3, this 4, this 5, this 6, this 7, this 8, this 9. So a lot of big boys, they are already in this zone, right? They are already in this zone. So when I saw that, I took my profit at this point. I took my profit at this point. When I saw this candle, this red candle, I took my profit immediately, because number one, I have a previous sign, a past sign that this is a zone, and number two, I saw a candle confirmation. So I took my profit at this point. So if you look at it from year to year that I took my profits, that's like risk to reward ratio 12, which is still awesome, right? Which is still awesome. So that is how I use my Fibonacci retracement and extension. So if you want to look at the setting, let me show you guys the settings so that you guys can copy it, right? So let me show you guys the settings so that you guys can copy it and use it in your trade, right? You can use it in your trade. So this is the settings that I use. I don't use any extraordinary things to do to take a trade, right? So this is just the setting I use. My 0, 0.5, 0.618, 0.79, my 1, and minus 0.27. So you can copy this, insert it in your own Fibonacci retracement, and start using it. Don't forget how to use it. You have to set your Fibonacci from the recent high to the recent low for a bearish, and for a bullish from the recent low to the recent high. So it is vice versa, right? So let me come again. For a bearish move, from your recent high to your recent low, and for a bullish move, from your recent low to your recent high. So that is how you plot your Fibonacci retracement, and you can start using it and start using it in your trade. So I believe this short video is educative enough, and I believe it will take your trade to the next level. Believe you me, if you can practice this, it will definitely take your trade to the next level. You don't have to rush. Just take your time to study it, to watch it. You can watch it over and over again. And also the market pattern that I said, you can also watch it, is on my YouTube channel. I'm going to drop the link around this video, so you can also click on it, watch the market pattern, and also incorporate that into your trading life. So I believe this video would really help a lot of you guys out there that is asking me that, oh, Crown, how do you use your Fibonacci retracement and extension? So you can incorporate this and use it into your day-to-day trading life.